You're right, guys, welcome back to another market watch list video. This is the second attempt to record this, as unfortunately I forgot to press record on the first attempt. So here goes, hopefully this one will make it out. So I'm going to start on the DXY. And as you can see, towards the back end, towards the start of last week, we did see this rejection as it was greatly anticipated due to this support and resistance band and a rejection off it during November. And we saw this impulsive move to the downside, taking out this previous swing low, which now put the DXY into a bearish structure. But now that we've made this lower low, on Friday we had non-farm payroll from the USA, which are employment figures, and they were better than expected, which is a positive outlook for the US economy. And all this provided was just a slight little pullback, and then it's rejected the 38.2, which, as we know, is a reliable level after an impulsive move. And then it's just nicely rejected it, and I do see further downside for the DXY. So what we could see here is literally just to fulfill to the minus 27% of the Fibonacci, which would match the current double bottom, which is held since October, and it has been a level that has been tested many times before, and it is around the psychological level of 97.00, a key level on the DXY. So it will be interesting to see if we do fulfill this, and if it just makes a triple bottom and bounce back up. But I do see it going down to at least this low here, which would mean that US pairs should see some weakness over the next few days. So we can take that analysis into our pairs that we have US dollar in, and apply that knowing. So we can take that knowledge into other pairs such as USD yen and your USD to try and forecast where the moves will be for the next week. So it will be a shorter video this. I'm just going to mention a few pairs for this week, and I will feature others throughout the week as they develop on my Instagram. So please make sure you follow me on there so you can catch that. So we'll move on to the CAD yen. So as you can see, CAD yen towards the middle of last week, we had this nice buy setup as we saw the rejection from this support and resistance band. As you can see, price rejected it quite a few times previously, and a nice push to the upside, and it kind of ran out of steam on Thursday and then the start of Friday. On Friday, as well as non-farm payroll that I alluded to with the DXY, we also had Canadian employment data, which was less than expected, meaning a negative, or a weaker CAD, I should say. And this just proved to be a nice pullback for this pair. We are still in a bullish structure, making higher highs and higher lows. And as you can see, we've made a higher low on the 0.71% Fibonacci level. So this does look good for a long. However, I would not be getting into this on market open. I would wait for a solid close above the 1 hour 50 EMA, which, as you can see, will be around 82.20 by the time price does reach it, which coincides with the 4 hour 50 EMA also. So what I'll be looking to get in on this pair is a solid close above the 4 hour 50 EMA, or a break and retest. Failing that, if we do see further CAD weakness, we could see a break of this swing low here, which would negate the bullish structure that we are currently in. Wait for a retest, and then on a rejection of that retest, take this pair short. And that is very likely. However, we still are quite low in this pair, as I have alluded to over the past couple of weeks. But with the Canadian weakness, could very well be possible, but we'll sit on our hands, let the market play out and see what it says. But there's two very viable setups either way. So the next pair we'll move on to is USD yen. So USD yen is in a very interesting position. As mentioned in my market recap in my previous video, I did get in this pair quite a few times last week. However, price did stall around the daily of 50 EMA as to be expected, as it's coincided with this support and resistance here. More so support over the past few months or so, as with price rejecting this level numerous times and it holding quite well. But I do see for the downside for this pair using the DXY correlation that I mentioned at the start of this video. With a DXY sell-off, we would see a weaker US dollar, which would mean this pair going towards the downside. And then to get in on this pair, all I'm looking for is a clean break of this level here, potentially filling the minus 27% of this smaller fib that was drawn on the 4 hour. Wait for a retest of 18.44 or the daily 50 EMA, which is around 108.56. And then there's plenty of room to take this to the downside with not much in between to stop it. And the first target for the larger target for the downside would be this ascending trend line here, which, as you can see, if I zoom out on the weekly just quickly, you can see it would provide a third touch of this outer structure and coincide with the 10500 key level for this pair. So it is a very attractive proposition to sell, but as I mentioned in the last pair, sit on your hands. After such a good week last week, this is what I'm going to be doing. Don't want to give back anything to the markets, but there is a very valid setup there. I'll now move on to another US dollar pair in the Euro USD. So as you can see with this pair last week, we did get this double bottom on the 61.8% Fibonacci level and saw a lovely impulsive move to the upside, which did manage to catch. And then, as mentioned on USD Yen and the DXY, we did have non-farm payroll, which led to this form of a pullback, which just gives us a better chance to get back in on another entry. And the daily 50 EMA, which was around 1.10544, stopped pricing its tracks, and we did see this wick to the downside and rejecting the 0.50% Fibonacci level. To get on this pair again, it's just a basic wait for a clean break above the 4 hour 50 EMA and then a retest, or if we do see a bullish break above the 4 hour 50 EMA and it's a convincing close above the 4 hour, then it is perfectly acceptable to take an entry on this pair as a result of that happening. I don't really see too much downside for this pair. However, with it being quite a fundamentally heavy week, who knows what could happen. We could just see it maybe come for a third touch of the 61.8%, which would still mean we're in a bullish structure, as it would mean failure to make a lower low, and we'd still have this higher highs, higher low, higher high structure. So it does look good to go long, but we'll just wait for price to confirm that. I'm now going to move on to two pound pairs that are very risky trades, but I just wanted to introduce them into this video for anybody that does have a higher risk appetite. The first one that I will go for is pound Aussie, and then the second one is also pound CAD. These two I did feature last week on my watch list, and pound CAD did have a very nice move to the downside. However, it was more of an intraday move, as we did see pound bullishness creeping towards the back end of last week. And as you can see on the daily here, we are in a very high value area of interest. Third touch of this outer structure. And if I zoom in, this is on the weekly, so these candles provide a lot of detailed information as they are a week's worth of price. You can see this kind of a hanging man, not completely, as we did have this wick to the upside, so not a complete hanging man close. And the significance of the hanging man is a bearish reversal signal, which will coincide with the third touch of this structure. So this is a higher time frame trade. It is trading against the trend. So what I would like to see for a higher risk entry on this pair would be a break of this trend line, a clean break below, a solid bodily close. Break this level here, come back up for a form of retest, potentially the 1 hour 50 EMA, or even it could be the 15 minute. And then take this pair down to these lows. However, I must stress that with the election coming up on Thursday, the pound pairs are going to be extremely volatile. They could swing a few hundred pips either way. So if you're going to trade the pound, only do it with 0.5 to 1% risk of your capital. And it's just a similar story on pound CAD really. Higher time frame trade, 78.6% fib level, the most probable area of reversal. Got this support and resistance band here, and all we're waiting for is a break of this trend line, a clean body close below it, retest, just draw the line, the arrows on for clear showing, wait for a retest. By the time it gets to it, could be a smoothed 50 EMA on the 1 hour. Have that there, price reject this area, and then we see a move to the downside. So that is just 2 trades for the higher risk appetite traders. I probably won't be taking these personally, just because the fundamentally heavy week that is in store this week. But I just wanted to put them in for anybody that wished to take them. So yeah, that's it for today's market watch list. I hope you did enjoy. If you found any value in the content, please like, comment, share and subscribe. And if you did take any of the trades from any previous week or this week, please do let me know. Put it in the comments section down below or drop me a message. It'll just be great to see that people are taking the content and putting them into their own ideas and making trades off of it. Thanks very much for watching, and I'll catch you in the next one. Cheers.